Zydus Life shares correct over 4% but are off the lows of the day after Teva Pharma receives an approval from the US FDA for an ulcerative colitis drug, threatening Zydus' monopoly in the generic market. Zydus will also pick up a 50% stake in Sterling Biotech for 550 crore rupees.
And shares of BHEL rally after the company wins 11,000 crore worth of orders from Adani Power.
Block deals continue on the last street. AU Small Finance Bank trades higher after 1.7% equity worth 804 crore rupees changes hands in a block deal. On the other hand, Med Plus corrects after a big trade where 12.8% equity changed hands at 616 rupees a share.
Trent and BEL are all set to be included in the Nifty 50 from the 30th of September. Trent gains over 1%, while BEL also trains with mildly gains.
And Intera Building Products makes a strong debut on the last street. The stock lists at a 44% premium to its issue price. The management joins in to speak to us on the outlook going ahead in just a bit from now.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Hormuz Fatakia. Well, Hormuz, it's a good-looking screen. But before we get to the markets, I wanted to congratulate you on your work anniversary here at CNBC-TV18. It's been great working with you, an absolute asset to the team and a team man as well. So wishing you the best, Hormuz. As I always tell you, it's just the start. Big runway for you from here.
Thank you so much, Nigel, and it's a pleasure always because you are the first co-anchor as well. So it's an apt day to start the show as well. It's a good-looking screen, as you said. We crossed 25,000 on an intraday basis. It's just off those levels slightly. 25,078 is the record high on the Nifty that we need to keep an eye out for. Most of the sectoral indices are doing well as well, but the IT index is the one that is contributing to the gains in majority this morning after the speech from Jerome Powell on Friday. The overnight rally that we saw on Friday on the Nasdaq as well. The IT index trading with gains of 1.5%. The broader markets are slightly subdued if you speak in comparison to the moves that we have seen over the last few sessions. The mid-cap index is up 0.5%. The small-cap index is up only 0.3%. But of course, there are plenty of stock-specific moves there.
Well, that's right, Hormuz. Let's get straight then to the new kid on the block, engineering and manufacturing company. All right, I think we'll just hold on to that thought for just a bit. In a short while from now, we'll get to address the new listing as well. But Hormuz, you know, a lot of stocks actually are moving around from the broader markets in particular. GSPL, that's the stock. I think the street is sensing there could be some kind of corporate development on that front. And that's why that stock is flying away. So we'll have to keep an eye out on that. And mid-cap IT as well is doing rather well. Just a word on the Nifty Bank. For me, that's going to be the swing factor from here on. It needs to get past that 51,300 to around 51,400. That's the resistance zone. But let's get straight to the new kid on the block.
Indeed, and that is the stock that we were speaking about in just a bit. Intera Building Products is the latest listing on the exchanges, a 1,299 rupee a share listing, which was a 44% premium to its issue price of 900 rupees a share. We are now joined by Gautam Suri, who is the director, and Manish Kumar Garg, who is the CEO of the company, to discuss the outlook going ahead. And now, gentlemen, good morning. Thank you so much for joining in. Firstly, congratulations on being a listed company now. It's a big day for you guys and the team as well. We start off with numbers straight away. Since now you are a public company, you can definitely share some numbers. What is the growth that you are penciling in for FY25 when it comes to the top line? And we'll start off with that and then move to the margin front as well.
Yeah. So good morning and thank you very much. In last 3 years, you have seen the numbers. We grew at a CAGR of over 20%. Our order book is strong. So the outlook definitely is very positive, and we are doing good.
All right. Good morning, Mr. Suri, as Mr. Garg. I saw you all ringing the opening bell, and you could see the kind of passion that you all have built this company. And now you welcome to the bosses as well, and we look forward to chatting up with you from here on. Now, as you said, Manish, you all have been growing at a rate of close to around 20%, and you believe you can grow from here on as well. So give us a few details. This year, if I go by that 20% run rate, you should at least end in that vicinity of around 1,600 crores of revenues. Could you confirm that? What would margins look like? And also, if you could split the top line mix as of now. As of now, I'm looking at it, pre-engineering building contracts is close to around 75-76% of the mix. How do you see the mix turning going ahead?
Yeah, so the mix is going to be pretty much the same. Pre-engineered building remains our main product line, and that is what is going to remain the main product line. Now, as far as the growth numbers are concerned, our order book is very strong. There is momentum in the market given the macroeconomic factors and the private capex, which really, we represent as a proxy. So I'm sure things externally looks very bright. Our order book is pretty strong. You saw that in RHP, it was 1150 crores at that time. It keeps growing all the time. And if past is, any reflection of how good we have built the company for a sustained performance, I'm sure the performance would be much better than what it has been, at least sustainable. So that's the kind of growth we are looking at. We will keep working very hard.
Manish, I'm going to push you for a couple of numbers. Since you're listed now, there's no problem. The regulator,
yes,
with regard to your bankers, promoter, everyone's going to be okay if you share some guidance. So for this year, 1,600 crores, is it doable? And in the following year, you'll be closer in that vicinity of around 1,900 to 2,000 crores. Going purely arithmetically, what it means for margins as well?
Yeah, I would say we have the right ingredients and the recipe to deliver those kind of numbers. I think that is what I can say. And we will sincerely work very hard to push and give those kind of numbers. Of course, a lot depends on how we get there as we go forward. But yes, all the ingredients are there, the recipe is there for those numbers to be delivered. And as far as the margins are concerned, we are very conscious of the margins, sustainability. And we work on internal as well as external factors to sustain the kind of margins we have delivered over the last 2 years in particular.
We'll take that as a yes then, as the answer to our question, Manish. But in terms of utilizations as well, right, you currently have 4 manufacturing units as we speak. What are the utilization levels in each of them? And if you can also tell us that by the end of FY25, where do you plan on having your capacity at, which is currently at around 1.4 lakh MT, if I'm correct?
That is correct. So that answer, of course, I have. So our capacity utilization for what we call the utilizable capacity is about 80 to 82%. We already declared that our Andhra Pradesh phase 1 is the new capacity coming in, which has been funded all through internal accruals. And we are very shortly going to be starting our other plants also, so which are part of the objects to the offer. So yes, there will be capacity addition in FY25 as far as our new plant is concerned, which is the AP1, which is already declared. So the capacities are going to go up in FY25 and go further up as specified in FY26 as well.
By how much would that be, Manish, if you can share a number on that as well?
So I think AP1 is about 20,000 tons, and AP2, which is part of the objects to the offer, as I said, for which we have raised about 57 crores, is going to be another 40,000 tons. That's the kind of capacity build up that is going to be there.
So 1.4 plus 20 plus another 20, is that correct?
No, 40.
40
plus 40.
20 plus
so
40 and utilizable, as I call it. This is the machine capacity. Utilizable is always about 80-85% of the installed machine capacity, like that.
Got it. Got it. Let's get Mr. Suri as well in. Mr. Suri, congratulations, rocking listing with these big returns. Responsibility is on even more on you now. So what is your vision for the company, say in the next 5 years from here on? Because on a quarterly basis, we'll be interacting more often and we are going to be trying to see what is your vision. But on the listing date, 5 years from here on, where do you see the company headed? As of the last year, we have numbers. You're doing high single-digit margins, revenues of around 1,300 crores. And the last time you all joined us, we said that probably the peak capacity in the next 2 years will be 2,200 crores. But give us a 5-year roadmap that you've planned.
Well, not discussing the financial roadmap, but my vision, already we are currently in pre-engineered buildings, but we are more and more moving towards placing ourselves as a engineering company. We excel in engineering. We have a great engineering setup, and we want to, I see the company moving into more complex engineering projects, infrastructure projects, tall buildings. So my vision is to make Intera a global player as an excellent engineering company doing heavy structures and complex structures for any kind of application. That is my vision over the next 5 years. And I see it happening because Intera is well placed for that. I have built an excellent team. We have a great team. And I think Intera will go places as a excellent, unique engineering company.
One final question from my end, gentlemen, and either of you guys are open to answering that. You know, one of your RHP points mentions that there is some vulnerability that you have when it comes to raw material prices as well. How are you managing that to adjust to fluctuations in raw material prices? If I'm correct, steel is your major raw material that you consume. So if at all there is a fluctuation in raw material prices, how do you manage your margins in case there is an impact on that as well?
Yeah, so good question. Thank you for asking that. So we have a model, what we call for our, longer duration contract, which in our case is about 9 months to 1 year, is what we call the variable price contract, where steel price increase or decrease is a pass-through, because we believe that we are an engineering company. We are a pre-engineered, steel building company, not really speculating on the raw materials. So therefore, for all our variable contracts, which form something like 40-50% of our order book generally are steel pass-through. So the fluctuations don't really hit us. They are passed on to the customer either northwards or southwards. And rest of the orders, which are fixed price contracts, are protected by holding inventories, which we hold about 2 months, and then the steel cycle, which we use special steel, is about 2 months. So that way we are reasonably protected against any up or down in the steel prices, because we don't wish to speculate on steel. That's not what our business is.
Okay.
And there is no major variation in steel prices, except 1 or 2 hiccups happened in the past.
Got it. So most of it you all are protected. Just to squeeze out one more number, revenue aspiration is what we got. Margins in the vicinity of around 8.5 to 9.5% is what you have done, and you believe that you can maintain it at that. So we'll hold it at high single digits out there. And you also mentioned at the start of the interview, you're sitting on a big order book. We have the number for what's given in your, in your DRHP, but we would like to know what is the updated number as well. What's it right now?
So updated number is about 15% more than what it was at the time of printing the prospectus or RHP.
All right. So that would be in the vicinity of close to around 1,300 crores odd, at least.
That is correct. Yeah.
It's a pleasure speaking to you all, gentlemen. We wish you all well. Appreciate you joining in, giving us a sense about how do you all see business shaping up. Celebrate the day and look forward to chatting up with you all in the time to come.
Thank you. Thank you, sir.
All right.
Thank you.
All right. Well, time to shift focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Neha?
Today's stock idea is Medi-Assist Healthcare, which is the only listed third-party administrator for the insurance companies. The company's revenue is linked to premium under management of the health insurance companies, its services, and hence the stock offers a unique opportunity to participate in the growth of the health insurance industry. Medi-Assist leads the industry with a market share of 21% in terms of the total health insurance premium managed by the third-party administrators as of June end. While the bulk of its premium is from the group policies, it is also focusing on the retail health segment, which is growing at a faster pace on a smaller base. The company has historically delivered EBITDA margin in the range of 23 to 25%, except for FY24, which saw margin declining to 21%. The decline was mainly because of the acquisitions done by the company in the past 12 to 15 months. As per the management, it will take 3 to 4 quarters to realize the synergies from the acquisition and for the margins of the acquired companies to improve. The ramp up of the acquired entities could be the margin kicker for the company going forward. The company has a net cash balance of 270 crores as of June end and has delivered a return on equity of 19% in FY24. In terms of valuation, the stock is trading at around 29 times estimated earnings for FY26, which is reasonable considering annuity-like revenue, high operating leverage, and dominant market position in a growing industry. Given the sectoral tailwinds and vantage positioning of MediAssist, the stock could be a long-term compounder.
The other way there from moneycontrol.com. Time for a short break here on Chartbusters, and as Nifty nears a record high, we'll get Shivangi Sarda of Motilal Oswal on the other side to get you a technical check on the markets and specific stocks. Stay tuned, back on the other side. Back with us here on Chartbusters. Before we get to the markets, just pull up NIIT. The stock is locked in a 20% upper circuit, and that is after the block deal that took place on Friday. And Ramesh Damani, the veteran Dalal Street investor, has emerged as one of the buyers in that block deal. 20% upper circuit there for NIIT at 153. But good time to get in Shivangi Sarda of Motilal Oswal Financial Services for a chart check. Shivangi, good morning. Thank you so much for joining in. The Nifty crossed 25,000 intraday, but do you think that this expiry week related volatility will keep things choppy as we go into the rest of the week?
Morning, Thomas and Nigel. Thank you for having me. So we've seen that, there has been a good support-based buying. Bulls have been in action from the last week itself. And the put-call ratio is also sustaining above 1, which clearly indicates that put writers are making a good base over here. We've touched, 25,000 and holding near about it. And we are expecting this move to continue because the kind of, stabilizing we've seen at these levels is quite, good. Last time we touched these levels, we've seen that, there was a lot of profit taking at that zone. So overall stock specific action sector pockets are going to drive this market. And, we are expecting next 25,200 for this index with a support of 24,850 immediately. Now, talking about Bank Nifty, we've seen that, of course, lackluster move continues over here. But again, it has managed to, hold above its 50 daily exponential moving average, and round about, 51,000 becomes a good make or break zone over here. Now, on weekly basis, we've negated the lower highs, lower bottom formation for Bank Nifty, and slight bit of, follow-up action is also seen over here. But clearly, momentum is missing in this entire space as heavyweights are not performing and moving quite range-bound. So we are expecting buy on decline on both the indices, but of course, the conviction would be more on the Nifty side. Talking about levels for Bank Nifty, next we are looking at 52,000 immediately and 50,750 as the support for Bank Nifty.
Got it. All right. Hi, Shivangi. Good morning. Good to see you in. Individual stocks, what should we be looking at?
So for individual stock, first up on my radar is Persistent. In fact, this entire space can be seen in a lot of action and buzz. This particular stock, we've seen that, in this series so far, there has been a good amount of longs that have been built up in this stock, especially, from the second week of August till now. And there has been gradual support, which are shifting on the higher bases. On the weekly basis, it's given a Poland flag pattern formation breakout. So overall looking quite positive. Took support at its 50 daily exponential moving average and can be seen, scaling upwards since then. So recommending a buy here for a target of 5250 levels and a stop of 4900 zones. Now, the second pick on my radar is Bharti Airtel. Now, this stock has also seen a good comeback. And, although it was, moving in a very narrow range from the last 2 months, we've seen that there has been swings within. And this time it is getting ready to surpass its higher zones. The stock has, taken a good support and halted near about, 1450 odd level. So this makes a good base for this stock and onwards and upwards for, this stock here. So recommending a buy here with a target of 1580 and a stop of 1485 levels.
Shivangi, there have been plenty of high flyers in the broader markets. First Source being one of them. It was on a tear, but that stock is slightly off its peak so far, around 8% off its peak currently, and it's down today as well. What do the charts indicate? Is there a floor anytime soon on the stock here?
Talking about this stock, we've seen that there has been some sort of range-bound profit booking move in this on an immediate basis. But overall, the longer-term structure has been intact. But clearly, there is momentum which is lower on this stock. So I would recommend wait and watch for this one.
Thanks a lot, Shivangi, for joining in and filling us in with your take on the market as well as individual stocks. For the time being, though, we'll slip in a short break, come back, continue our focus on markets and stock-specific action. Welcome back. Keep an eye out on a couple of stocks in the broader markets. Indian Hotels, that stock has spiked up. Majority of the move comes in the last 45 minutes or so. Birla Soft is building on to those gains. So big up move is what we're seeing on that one as well. On the flip side, a few stocks have come off. So you have Torrent Power that's come in for some kind of profit taking now. From the Nifty, since we have come off a little bit, well, a few stocks. You have Apollo Hospitals that slipped a little bit. Adani Enterprises as well has slipped a wee bit. And BPCL, I think, as well. That as well has trended a little bit lower. But we're just nitpicking. Otherwise, the markets are looking good. We're on the verge of moving to fresh all-time highs. So what we'll do is we'll wrap up on this edition of Chartbusters. That's it from Hormuz, myself, and the entire team. You stay with us. Trading Hour comes up next.